Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 11th of March. Starting off with the FTSE 100, which narrowly missed hitting our worst case scenario target there around 85.60. That's the 50-day moving average. We obviously went back below the old January resistance around 8600. Below the 50-day line, we've got the next level down, which is basically 2025 support there, 84.60, but hoping that this market will manage to avoid that, given that we haven't had quite the torrential decline for the market that we may have been expecting. If you are a bull and looking for a momentum trigger, then either an end-of-day close back above 86.20, the mid-February support, or back above that uptrend line from January, which is broken around the 86.90 level, but I suppose 86.20 more realistic and gives away less of the potential upside. Moving on to the DAX, which certainly put up a great fight, and I suppose still actually putting up a great fight. We're not too far off the highs. We managed to bounce above the floor of the gap there, 22,300, and above the floor of the rising trend channel there from back in November. So full marks there, or lots of marks there. We also bounced above the RSI 50 level, or we're above that. So still within that rising trend channel, looking for a retest of the top of the channel and 23,500 sometime later this month. Worst case at the moment, we've got to test 22,000, but not expecting lower than that. The problem market has been, one of the problem markets has been the Dow, and here you can see that shock horror managed to get back below the 200-day moving average. I always like it on Twitter that people tweet out that they tweet out something that everyone can see. But anyway, here we've got the Dow almost closing almost exactly on the 200-day line. RSI not looking great at all, in the sense that we've had now 3 or 4 peaks arguably below RSI 50, so there could still be further downside. We've tested the November support there, the initial support there before the Trump election, and really don't want to see the market back below 41,600, as the next level down is way down near 40,000. On the upside, the earliest buy signal will be an end-of-day close, or another end-of-day close back above 42,000, and then up to 43, but you can't see further than that at the moment. Another problem market is Bitcoin, another market which benefited from the Trump election, but managed to have a bear trap rebound from below the February support, or well below the 200-day line at 83,300, and just on the floor of that rising trend channel from this time last year. You could argue that line is there around 80,300, so we are back in that channel. The initial resistance, the 200-day line, just shy of 84,000. After that, 90,200, and the old support pre-March. The other point to note, I suppose, is that we do have an end-of-day close back below 78,000, the February low. Then we could be down towards the 72,000 area, 72 to 74, which was the pre-November resistance. Now that would become support. Positive here is that we've got bullish divergence, so a lower low for the start of today, but higher RSI trace. So that might be the trigger that aggressive bulls would be looking for, as far as calling the floor after the sharp decline from the January peak. Moving on to gold, and here we are tinkering with the old neckline support there, so around 28.90. Want to see this market get back above that, otherwise there's still the risk of a move down to the 50-day line there at 28.25. That could be seen by the end of this month if we don't get a proper break of recent resistance through 29.40. On to the stocks, and not too many to get excited about. Cora continues to benefit from the situation in Mali, which is not something you can say very often, but here you can see that we managed to blow through our 3.6 pence initial target, and are now swiftly heading for the 6 pence zone, which I think we could get by the end of this month, especially given the way that we've had an unfilled gap to the upside through resistance, and both the 50 and 200-day lines are both rising sharply at the moment. On to a stock which I don't normally cover, but as it's a quiet day, we're on to Costain. Rising trend channel here, the floor of the channel there around 102 pence. That's there from this time last year, and above that looking for as high as £1.29 in the wake of the latest push to the upside. I'd like to see proper end of day closes above the 111 level, as that has been post December resistance. You could argue that we've had a double bounce at RSI 50, which makes this thing look good, and also we have a now rising 50-day moving average. Next on the list is Deltic, and here we're bouncing within what looks like a falling wedge. Gap close signal, but we want to close above that gap, the top of that gap there, 3.9 pence. If we can do that, then we could be on our way to the top of that wedge at 6.5 pence as soon as the end of this month. Moving along to European metal, and here we've got a rebound within a broadening triangle, which is looking good. We've had a very strong candle yesterday, opening the low, closing the high, plus a gap close buy signal there from yesterday, looking for the top of the broadening triangle there at 11.5 pence, while we're above the recent resistance, February resistance, at 7.8 pence. On to Georgina, which obviously has had a bit of a rough ride in the past, but it looks as though it's still trying to get through that 50-day line. The 50-day line there just above 6 pence. And the longer we stay above that, the greater the chance of a move at least to the 8 pence area, which is the top of that broadening triangle, declining broadening triangle from back in August. Best case is up to 10 pence by the end of next month if we can stay above that 50-day line. Moving along to GCM, which I think I covered the other day, and has to be said, it's rather exceeded expectations. Well, in fact, actually, it's hit expectations. We were looking for the top of the triangle there at 2.4 pence, which has been hit on the nose. The next level up is probably the line I'm about to draw at the moment, which would be the upper parallel of that resistance line. And that's heading for around the 3.25 pence area, if I just have a proper look at it. And we'll see that would clear the 200-day moving average as well at 2.9 pence. We haven't been above that for quite some time back in July. So a possible trend change there on GCM, and as I said, hitting that initial target right on the nose. Another stock which is threatening to hit our target is Skinbio Therapeutics. The top of the channel there at 22.8 pence. Hopefully we'll get that over the next few sessions. End of day close or end of week close above the initial target there from the December resistance line takes us up to as high as 34 pence by the end of next month. Ideally we stay above that recent resistance around the 20 pence level in the meantime. A surprise inclusion today is Symphony Environmental. Looks as though we've got a rising trend channel base, and we'll have both 50 and 200-day lines rising. In fact, they already look as though they are rising. 4.5 pence the target, perhaps as soon as the end of this month, although one might want to give it till the end of next month, given the generally slow price action for the shares. Ideally, we stay above 2.9 pence, that price channel floor. On to the last two, and a stock which I was trying to avoid looking at, given that any time it looks as though it's in a positive way, the company has a fundraise. But current situation is that we're trying to head for that June resistance line, and that's around the 1.7 pence level. Ideally, we get to that by the end of this month, which is also the area of the 200-day moving average. The reason for covering the stock, even though against one's best thoughts, is the way that we've had a bear trap island reversal, so gapping down last month and gapping up today. So that is one of the strongest signals around, which is always rather ironic when used in the context of Tern. But 1.6, 1.7 possible by the end of next month, especially while we remain above the floor of the gap there, 1.2 on a mid-close basis. Finishing off with Xtract Resources, which moved a bit in the wake of its Moroccan joint venture. Probably one of the better deals it's done, given that it's there's antimony involved, which is one of the hottest bullets and rockets commodities around at the moment, given that we're heading into World War III. So looks like a good deal for Xtract, and hopefully with a rising 50-day line, we'll see the shares at least push towards that 200-day moving average at 0.7 pence as the market appreciates the deal more deeply. That's it for me today. More updates tomorrow.